What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at the New York session, looking at both the S&P 500, Euro USD and a few other pairs as well, just to see what opportunities were available to us. And we can check out the analysis that led us to missing out on this trade because we never got tagged in. So let's jump into the analysis now and see what the charts offered us. So here we are on Euro USD, 15-minute chart, just looking for our key levels of liquidity. We're going to be using our liquidity tracker, which is giving us the green lines for untapped liquidity and red lines showing us liquidity that has been taken. So we can see in the London session this morning we did sweep previous day's high and took all of these relative equal highs out and have led to a bit of a reversal here. Currently coming into the session, for the New York session we're going to have liquidity up here and liquidity down here. You can see the previous analysis that I've done here, it's just popped up, but that is analysis for a trade entry that we were looking at. Let's just pop this off. So if we go on to the 1 minute, I'll skip forward and this should populate our London session liquidity for us as we go into New York. So yeah, it's done that. So the first minute of that we've got our London low and our London high, and then this orange box here is the new day and new week opening gap for today. So you can see that we did sweep the liquidity as we mentioned in London, and then we have pulled back now into the new week opening gap. So as we're going into this, essentially we are looking for a 2022 model entry, which would be sweeping this low or sweeping this high and then checking for displacement back into the range. So let's scroll forward now. What we're going to avoid is trading within this range because this is where we get chopped up. So I'm trying to stick to trading at the extremes of the range as opposed to trying to take any false entries, false signals inside the range. The aim for these next coming few weeks is to keep trading as clean as possible and just stick to the plan. As price develops, you can see we are working low, we're getting closer to our sell side liquidity. So we've just run the sell side liquidity here. And you know what I'm going to do? I'm going to delete all of the drawings and then we'll start fresh. So we've ran the sell side. I'm going to mark that as our sell side liquidity failure to displace. So we're looking for a failure to displace, which means that we want a break of structure, and our break of structure will need to be at this high with displacement if we are going to get a 2022 model entry. We've still got untapped liquidity below us. So you can see last week we did have a really strong bullish move which has left lots of untapped liquidity and lots of inefficiencies as well to the downside. So strong reaction there, strong reaction here. So we've taken that, we've left a fair value gap, we've closed above this high. So we've failed to displace below this low. We've had strong bullish displacement. So I'm classing this as displacement because I've had one candle which has engulfed several bearish candles, and also a second bullish candle, again a displacement candle because it's engulfing bearish candles and it's closed above the high. I will mark this as our breaker block. So this is the last bullish candle before we take this low out. So these two bullish candles, they put in a swing high and then take it out. So this would be my breaker block now. Breaker in here. Let's just scroll forward and hopefully we can leave a fair value gap at this point, which we do. So we've come back, we've tapped the breaker block and we've left the fair value gap here. So this would be the entry to go long just before 9 AM opens up. We would have to have a stop loss below the low because we do have a fair value gap down here. 1 to 1 would be my first take profit. So I'll take 50% of the trade off at 1 to 1. We'll come back and we've tagged ourselves in. We've hit 1 to 1, so perfect entry here. Now the next target for liquidity will be probably the session highs. So if you look here, we've got lots of kind of relative equal highs here. So I'm going to sit this at the session high, which gives us a nice 2.2. So we could take profit there and then potentially leave a runner on to hopefully take out the high of the day. So we've not quite taken that. We've respected this fair value gap here. Respected the 50% of the fair value gap. Let's see how we react above this. So right now we're risk free. We've hit 1-to-1. We've taken 50% of the position off. 50% take profit, so we've got 50% left. So if price does come back down, the 50% take profit that we took cancels out 50% loss. So we will be at net zero or break even. Let's see if we can grab this session high to give us our 2.2R. So back into the new week opening gap, back into the breaker, and unfortunately we've not grabbed our 2.2R. So this would have been a break-even trade here. Could have potentially looked to take profit a little bit earlier at the 50% of this fair value gap if you'd spotted it, but I would have hoped for a liquidity sweep. To be fair, I would have thought we would take that liquidity. 1.6R. So that there is a break-even trade from my trade analysis. So we're now looking at untapped liquidity down here. So we are breaking lower, we are breaking beyond that level. So we've taken 2 levels of liquidity. We've got a couple of stacked liquidities below us as well. Our break of structure, if we are looking for the 2022 entry, is going to be up here. So quite a long way away at the moment. We're into the 9:30 open now, so the New York Stock Exchange has just opened. We have swept the session low. Our new swing high is here. So bear in mind we have already taken liquidity. We've taken also the Asia session low as well. And we've taken previous day's New York low if we look back as well. So we've taken quite a lot of liquidity already. So this could be a potential reversal area. We do have further liquidity to the downside if price does want to continue going down. So we're basically just looking for the reaction here now that we've taken that previous New York session liquidity. We've come down and we've run the first level. So again, our break of structure is still here. Impulsive move down. We have bought back and an almost equally impulsive move back up again. See what happens at this fair value gap. We've closed through that fair value gap and left a fair value gap here, so this is a good sign. We've closed above the break of structure with a body close, so that is also a good indication here. And we have got a breaker block now. So again, these are the last up-closed candles before we swept this low. So this breaker block could well provide some resistance for us. We do have a fair value gap within the breaker block as well, so I would take that as an entry. So these are not massive displacement candles, but we've got a body close over here, a couple of displacements higher, sorry, a couple of fair value gaps going higher, and an equal candle here essentially. So I would risk that. Stop loss below this candle here. So this is number 1 candle. Number 2 creates the fair value gap. Number 3 is the start of it. So we will cover this fair value gap with a stop loss below the low. It's in this breaker block, looking for a 1-to-1. Unfortunately, price pulls away. I'll then move my entry up. Now this is where, unfortunately, I didn't get tagged in on this one. So I did move my entry up. I was hoping that we'll come back, tap the very top of this breaker block so I could take a run on the highs. Price almost tags it. It tags the fair value gap. So if I'd have put my entry there, I would have been in the trade. I was being a little bit greedy. I was trying to get the breaker block. So maybe poor management on my side. And price begins to run away. So if we would have taken that fair value gap, the fair value gap was over the breaker block. So let's just make a note of that for future reference, and then we would target the session highs. Would we be at 1-to-1 yet? So yeah, we're at 1-to-1 already, so risk-free, and then targeting the session highs. Let's just blast forward through this. So we're out of the session now, and we do eventually take the session high for a nice 2.1 R trade if we were to get in on that fair value gap. So say maybe on my part in lifetime, I was being greedy, I was hoping for a bit more of a pullback, at least into this breaker block, essentially the same as we had here, the price to pull away, but it just tapped the fair value gap and then rocketed away without actually tagging me in. So I missed the entry on this one, but that's two nice 2022 mentorship entries on the Euro USD pair. There are also nice examples of the 2022 mentorship on pound USD. So likewise, we swept liquidity from the London low here. We also swept the session low just down here before breaking structure. Now the break of structure on this is quite high up, so the break of structure is up here. Ignore that one. This was our break of structure, but again we had a break of structure with a breaker block here. So this is the last up closed candle before we took the lows here. So this swing point here with these bullish candles is our breaker block, which causes price to be taken. We close through on this candle here, come back into the breaker block with fair value gap, and then take off. So your entry could be at the breaker block, or indeed in the fair value gaps within the breaker block, targeting the session highs, which are just up here, leading to a really nice 2.5R trade with essentially zero drawdown. So again, just keeping in mind these breaker blocks. I'm really working hard to try and identify these because I think they're a really good signal, similar to balanced price ranges, that price is reacting off these without having the need to dig deeper into these ranges. So there is one on the pound dollar. Aussie dollar looks a lot more interesting. Similar setup to the other ones that we had here. So we've swept London low, we've swept various levels of liquidity coming into the session. Our break of structure is up here, so we've come down, we've put a low in, broken structure. Our last up close candles is this run of bullish candles here before we broke structure. So this run of bullish candles is our breaker block. They led to this swing high, which then generated the move down. So that's how we're identifying our breaker block. The last run of up closed candles to put in a swing high before we broke down. So I would have that as our breaker block. Price closes above for our break of structure. So we have a body close. We have fairly big candles coming up again. So decent level of displacement. Breaker block taps it. This is the key giveaway. We have a breaker block with fair value gaps. Again, unicorn entry, I think he calls it. But this is the one that you want to be jumping on when you see it. Stop loss just below the breaker blocks. Potentially there, potentially down here. 4R taking out the session high. Really nice trade on Aussie USD. New Zealand USD, no entry. So price again did come down, sweep all these levels of liquidity. Our break of structure is this break of structure here. Our breaker block is this one here. So this is the last bullish candle that generated the swing high to come down and sweep liquidity. So our last bullish candle here is our breaker. Price obviously never came back to tap it. We'll jump onto S&P 500. You can see why I was not interested in trading this again. I'm not quite sure what's going on. We've had a couple of sessions now on S&P 500 where there is just no volume. 9:30 starts, we have a bit of an impulsive move up and then it just fizzles out. gaps all over the place in price action. It's just not something that I'm interested in trading when it looks like that. When I'm trading US, I want to see something more like this, you know, where we've got proper movement in the market, as opposed to this broken up price action, tight, tiny little ranges. There's just no room to make any profit there. I mean, the full range on US 500 is what? 18 handles. There's just nothing. There's nothing there. That consolidation there is your 5 handles. So yeah, I can't see any. I wasn't even entertaining trading S&P. So that's the analysis. Break even trade on position 1. You could have potentially bagged profits if you were a bit sharper than I was. And then unfortunately I didn't get tagged in on trade 2 on Euro USD. But we can see there were some nice trades on the other major pairs just based on the 2022 mentorship model. So I hope that was useful. Lots of examples to go back and look through on that one. If you got any questions, leave them in the comments section down below. If you did enjoy the video, please give it a thumbs up. And if you want to see more content like this one, consider subscribing. I'm dropping videos every day with market analysis and ICT concepts. Thanks very much, and I'll see you again in the next one, guys.